Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the New Zealand versus US dollar. We're seeing lots of volatility in the markets and in the major currency pairs today. The euro versus US dollar is up and down. The sterling versus US dollar up and down. Dollar versus yen, dollar versus Swiss, all moving up and down, which may be confusing to you as a trader at these points. You have to kind of take a broader view, maybe take a look back and try to make sense of the price action and see where those key levels are. In the New Zealand versus US dollar, I'll talk about that currency pair specifically from a technical perspective. What needs to happen to keep a bias more maybe to the downside or increase the bullish bias if it should make a break in that direction. So let's get started. All right, looking at the 4-hour chart, and recall from yesterday we fell down and reached the 61.8% retracement of this move to the upside at that point. I mentioned that we may see a rotation back to the upside. Why? Because the market had a big, huge move to the downside. We found a nice support. We started to build, and at that time yesterday, I also talked about this 200-day moving average that I would expect to see some resistance against that 200-day moving average, and ultimately the price would need to get above the 100-day moving average to increase the bullish bias. But as you can see, we did find resistant sellers against the 200-day moving average, and the price rotated back to the downside. Now the thing is, off the volatility, off the data this morning, we did move below the 61.8% retracement, but it was short-lived, and we saw a rotation back to the upside. And we've since moved back up toward that 200-day moving average. So we have a battle going on here. That's what the point is the ups and downs have created a battle-type situation between sellers who against the 200-day moving average and buyers maybe against the 61.8% retracement. And we got to live with that. We have to live with what the market is telling us. It's telling us it's a little bit unsure of what needs to happen or what is going to happen. And so the buyers and sellers line up against resistance, against support, and use those levels as risk-defining levels, bias-defining levels, and we'll see what happens going from here. So unfortunately, I can't really say, do we go above the 200-day moving average, move toward the 100-day moving average and break higher, or do we continue this the bearishness that we've seen and stay below the 200-day moving average and ultimately rotate below the 61.8% retrace, get below the swing area, move down toward this swing area down here. I don't know. That's what happens in trading. So pay attention to your spots. If you have a bias from a fundamental perspective or from a dollar perspective or something like that, then use those levels to your advantage and that the view to your advantage. And if it works, it works. If it doesn't, get out if it breaks in the opposite direction. So that's my look at the New Zealand versus US dollar, trying to make sense in this up and down trading range today. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.